started right on time because we only have 1 hour and a half, and of course it's an important and complex topic, and I'm guessing that many people will be also willing to give their own comments after the presentation of our three distinguished speakers. So thank you very much for joining us today for what is actually the first roundtable of our institute's newly awarded Jean Monnet Center of Excellence. You may not know it, but we have a new Center of Excellence, which is going to keep us busy for the next 3 years, and which is dedicated to examining the way the EU addresses situations of emergencies of any kind, so humanitarian crisis, wars, climate crisis, migration crisis, etc. And we also, of course, through this project, want to study the way the EU sometimes frames as emergencies, as specific situations, so as to gather political and popular support for measures that would otherwise be regarded as exceptional, too risky, or maybe even unconstitutional. Which brings me directly to the topic of today's roundtable, and that is the so-called Reparations Loan to Ukraine that will be negotiated tomorrow and on Friday at the European Council. So as you all know, this proposal includes a 0% interest loan to Ukraine of maximum 210 billion euros, although we're talking now about 90 billion euros. That correspond to the amount of cash balances at financial institutions in the EU, such as Euroclear, mainly Euroclear, that accumulate because transactions regarding the assets and reserves of the Central Bank of Russia are currently not allowed under EU law. So that loan should be repaid by Ukraine if and when it receives reparations from Russia at the end of the war. And the Union will repay then its borrowing from financial institutions, and those financial institutions will in turn repay the Russian central bank. That's at least the theory. This mechanism, of course, also requires the mobilization of Russian assets for an indefinite period, as opposed to the 6-month renewal system that currently prevails. And all this, of course, is not risk-free, whether from a political, legal, and financial viewpoint. The alternative, namely the EU borrowing at the capital markets, the money that it would lend to Ukraine, seeming less risky, but also unlikely to gather the support of all member states. So it is to talk about these risks and the way that they can or cannot be managed that we have invited to this seminar two academic experts and someone I would call an insider, right? So I will first give the floor to Professor Van Elsuwege from Ghent University, who will describe the Commission's proposal and offer a critical assessment of it from an EU constitutional law viewpoint, I guess. I would then slightly change the order of presentation and probably first ask Mr. de Bassompierre mainly to talk and to explain the position of Belgium. Mr. de Bassompierre is a director at the Belgian Ministry for Foreign Affairs. He kindly accepted to replace Mr. Benjamin Bodson, who is the deputy head of cabinet of Foreign Affairs Minister Prévost. Mr. Bodson is currently attending a meeting at the Belgian Parliament on this very topic. He'll do his best to join us for the discussion, and Mr. de Bassompierre will have to leave us before the discussion. So that's why I'm at 3, I think. So that's why I'm suggesting that he would talk in seconds and explain the position of Belgium on this issue, which is a minority position, but it's, however, gaining traction and support recently. So let's see to what extent that is convincing. And yeah, last but not least, then Professor Pierre Klein, the Dean of the Law Faculty at the Université Libre de Bruxelles, international lawyer who will discuss the compatibility with international law of the Commission's proposal. We will then open the floor to the audience for questions and answers, and we will wrap up at 4 p.m. So thank you, a special thanks, of course, for the 3 of you for accepting our invitation, and everyone, of course, for being here today. And I will now give the floor to Professor Van Elsuwege. Thank you.
Many thanks, first of all, for this initiative to set up this roundtable discussion. I think it's a very topical, but also, of course, quite a politically sensitive and legally quite complicated topic. So, as agreed, I will focus on the EU law dimension of the proposed EU reparations loan for Ukraine, and I think colleagues will then tackle more the international law aspects. Now, to fully understand the discussion, I think it's good to also know where this idea and proposal comes from. I mean, using Russian assets has been discussed for quite some time, but it really was put on the agenda, I think, when Commission President von der Leyen, in her State of the Union in September 2025, explicitly referred to the idea of a reparations loan for Ukraine. And I reread her State of the Union, and there were like two clear messages that perhaps are not that easy to be reconciled. But the first message was very clear, which was, I mean, this is Russia's war. Russia is responsible for the war of aggression and should pay reparation for it. So that's the first clear message. The second message as well is that in order to do this, we have to do this in line with international and European law, which in essence means that we cannot simply take the assets and give them to Ukraine. So the assets themselves will not be touched, but only the cash balances that are associated to the assets. And that, I think, is quite important, and it's something what I'm often missing in the public debate and discussion about this entire topic, and even sometimes by public statements by the Belgian Prime Minister. I saw him last week on TV literally saying that it's not a good idea to steal Russian central bank assets and give them to Ukraine. But I would say the construction is a bit more sophisticated than that, because simply taking the Russian central bank assets and give them to Ukraine, that would be a violation of the law, obviously, because that would be an outright confiscation. That's why the entire proposal is designed to be temporary and reversible, because these are the two, I would say, crucial conditions that you have a kind of legal construction that is in the end temporary and reversible, because otherwise, I mean, it would indeed be quite problematic. Now, the main challenge, of course, is to have an instrument that is both temporary and reversible on the one hand, at the same time puts pressure on Russia to pay for war damages. So to reconcile all these different types of interest, we have the proposal that was put on the table. In essence, as was mentioned, the idea is that the EU would borrow the cash balances of Euroclear, whereas the assets themselves remain the property of Russia. So you would be the European Union borrowing cash balances linked to the assets from Euroclear, and then that would be based upon a debt contract, and this money would then be provided as a loan to Ukraine, where Ukraine would then repay only after the end of the war and after Russia compensated for the damages caused by the war. So that's an entire circle. To make that work in practice, of course, there is one core risk. The risk is that Russia's assets at a certain point would no longer be immobilized, because at that point, of course, Russia could claim the value back from Euroclear, and Euroclear should be in a position to pay this money immediately back to Russia. So that's the big risk. So that's why the continuation of the immobilization of Russia's assets is quite crucial for granting the reparations loan to Ukraine. So the two are somehow connected, and that's why the European Commission in December made this connection when it made the proposals. It basically proposed two core regulations. One, which was a regulation on emergency measures addressing the economic difficulties caused by Russia's action. I'll come back to that in a second. But in essence, this aims to guarantee that the Russian assets remain immobilized for an indefinite period, or at least until the core condition is satisfied, that we have an end of the war of aggression against Ukraine and Russia paid its damages that is due to pay under international law. So it's to ensure that there is no premature end to the immobilization of the Russian assets as a core requirement to avoid a situation that, the Russia simply gets the money back and didn't pay for its damages, and you have the problem that Euroclear would have to provide this money to Russia at that moment, whereas the money is actually already then provided as a loan to the EU and then to Ukraine. So that's a crucial first element. Now, in the Commission's proposal, the regulation and one provision of the regulations I find quite interesting in Article 4 in the proposal of the Commission also included references to the management of the cash balances. Which was a direct link with the other regulation, which is the regulation on actually granting the reparations loan to Ukraine. So the Commission's proposal made a connection. I've seen that in practice, this connection was kind of not followed by the Council, because there's one article on the management of the cash balances of the financial institutions like Euroclear in the first place. That article was deleted from the Commission's proposed regulations on the emergency measures, and that was already adopted last Friday. So it means that is important because it means that the assets remain immobilized until the Council decides to stop the situation when the conditions would be fulfilled. So politically speaking, I would say it's crucial, it's very important, and it's an important, call it a trump card in the hands of the Union, because now we have the kind of legal continuation of the immobilization of the assets. Legally speaking, I think, we can come back to that in the discussion. It's to say the least, can be contested that the legal basis that was used for this regulation is perhaps not that straightforward, because it was based on Article 122, paragraph 1 TFEU, which is a legal basis that in the treaties is part of the EU's economic policy, that is there to be used in order to address economic difficulties within the Union. So the argument of the Commission when it proposed the instrument was that Russia's war against Ukraine somehow creates also internal kind of economic problems and economic difficulties within the Union, and that's why we need these type of emergency measures. Referring to the fact that there are also hybrid threats, that there is an impact of what happens in Ukraine to the EU's domestic internal economic situation. Can be discussed perhaps later on, but in essence here we see that the immobilization of the assets, which was essentially based upon a measure adopted on a CFSP legal basis that was adopted by unanimity and had to be extended every 6 months, with always the threat of a veto by Hungary or other member states. Now, this kind of risk that would be a premature end of the immobilization has been solved. Politically very important. Legally, we can discuss about this legal basis perhaps later on. Now, as I mentioned, this is already adopted, and the article that made the direct link with reparations loan was deleted. I think this was upon request of Belgium and maybe also of Italy, Malta, and Bulgaria, who actually explicitly made the declaration that the both discussions or the both aspects have to be separate. It's not because we continue the immobilization of the assets that by definition we will use the cash balances to provide a loan to Ukraine. So that is still, let's say, on the table. That's still the part of the discussion. Legally speaking, that's subject to another proposal, another legal instrument, another regulation with a different legal basis. The legal basis for that regulation in the Commission's proposal is Article 212 TFEU, which is the legal basis for granting financial aid to third countries, non-development countries, including Ukraine, which can also be adopted by qualified majority voting. But that's the legal basis for this measure. And here we have all, let's say, the aspects of this, construction where the EU would borrow from financial institutions such as Euroclear, with the provisions of the kind of guarantees in essence for Belgium. We'll probably hear more from that in a second, but the idea is that there would be a reference to member states guarantee agreements and some other clauses that would protect in essence Belgium against potential contestation of this entire scheme if there would be let's say contestations in other jurisdictions or on the basis of the bilateral investment treaty, then there should be guarantees included in this regulation. Now, to what extent that those guarantees that are in the proposal satisfied the Belgian concerns, that's probably something that the next speaker is better placed to highlight and to clarify. So maybe for the sake of the time for discussion, I'll leave it here for now, but I'm happy to discuss all aspects of this.
Okay, thank you very much, Peter. That was very, very clear. Thank you. And yeah, we of course fully share your misgivings regarding the legal basis, especially for the emergency regulation. Now, yeah, I suggest that we directly give the floor to Mr. de Bassompierre, so that he has the time to explain.
Thank you. Just I'll try to make a few points and to highlight, perhaps, because much has been said. I think the position of the Prime Minister has been exposed publicly many times. So I just want to highlight a few important things about that to understand well how we are reasoning here from the point of view of the government of Belgium. One, we should all see that two debates have been conflated here. There has been pressure for quite a while. Actually, we've been talking about this for more than 2 years about using the Russian assets. And it should be well understood that the positions of some of the member states in this debate is about doing something with the Russian assets per se. They think they want to do that. They think it's a moral it's a moral obligation to do something with the Russian assets. So discussion was initially in the last 2 years or so about confiscation, which has been put aside by most big countries, recognized as really going against international law. And then came this idea of the current proposal by the Commission to find a way to use the Russian assets without going directly against international law by seizing them. This has been conflated with the second debate, which is the need to finance Ukraine at this critical juncture now. The European Union needs to find money to support Ukraine financially, and this is very urgent. I think this has been fully recognized by the government of Belgium. And so we therefore have a debate that has a tendency to focus on the idea we need to finance Ukraine and we need to use the Russian assets, therefore we need to do it in that way in particular. What the Prime Minister has been saying for some time now is we do not have to do it in this way. The debate is not framed correctly. The debate is about how to finance our support to Ukraine, and the use of the Russian assets as proposed by the Commission is only one of these options, one possibility. He, therefore, at the last European Council, last October, demanded other options to be developed by the Commission, put on the table so that there could be a debate about diverse options. Now, this debate has now been reduced to two mainly, so still the proposal by the Commission, and the other one would be financing by lending from the borrowing from the financial markets by the EU. So we joint borrowing by the EU to support Ukraine. Now, in the debate between these two options, we have been saying for a long time that the option using the Russian assets is simply an option that is clearly. Perhaps I should start with the other one. If we borrow from the international markets, we know exactly how to do it. We know exactly how much it will cost. There will be an interest cost. This means the European Union would borrow and then would request the member states to carry the cost of the interest. So we can probably calculate more or less what the interest would be, and this would aggravate everybody's deficit to that extent. So nobody likes it. The budgetary situation in many member states is bad. So this is the main obstacle, is it's seen as costly.
Gabriel, tu peux revenir?
Yeah, now it's seen as costly, and there are also some member states that have difficulty with the idea of joint borrowing by the EU as a matter of principle, in particular Germany. So this is why this option doesn't seem to have enough traction to be adopted. It remains to be seen what will happen at the European Council tomorrow. Now, the other option is tempting to the member states, to many member states, because it looks cheap. You know, we're using the assets that are at Euroclear and other banks. Member states have nothing to pay. Great. So our position on that is this is largely an illusion. So, of course, if everything goes well and perfectly, indeed, it would cost nothing. There is, however, very high likelihood that this will be contested in many ways, and there is a big risk that the whole mechanism could be ended prematurely for a number of reasons. So the cost is not immediate, but is very real. It's very, I mean, it's potential, but the probability of being realized is fairly high. What we are seeing, or at least in part, and also the cost will not only be direct. The risks are of many, have many dimensions. So we have the risks directly for Belgium to be sued, to be condemned by an arbitral tribunal or other jurisdiction, and condemned to sentence to pay the money back to the Russian central bank. But more generally, there could be there is a broader risk for all of the EU, not just for Belgium, for financial consequences. As the professor just said, the whole system has been set up in a way that we are not confiscating the assets. Well, this is fine, but depends a lot on how this is perceived by international actors. I mean, we could say this doesn't amount to confiscation if other countries in the world say, well, we do see it as confiscation. We risk a big loss of confidence in the European financial market, certainly in Euroclear itself, and it shouldn't be underestimated how important Euroclear is for the stability of the financial markets. So we run the risk of simply other countries deciding that it's too dangerous to leave their reserves in Europe and pulling them back, with implications for stability of the international markets, fragmentation of the world financial markets, on impact on the value of the euro. Very hard to predict. So this whole idea is that we are going into uncharted waters and we don't know what we're getting ourselves into. It's very hard to know exactly what the consequences will be. The idea that it will be cheap and easy is an illusion. You should see this full of contradictions. As has just been explained, we are not actually using the Russian assets. We're using money that actually belongs to Euroclear and the banks. So in essence, this is like using the windfall profits, exceptional profits due to the situation of war. The idea is to use money that is on the balance sheet of these institutions because of an exceptional situation due to the war. But it's their money, it's not Russia's money. And we are going to sell this politically with two contradictory messages. We're going to tell our population this is great because we make Russia pay, and we're going to tell the financial markets, but this is not a confiscation of Russian assets. Very difficult to do. And so the main message of Prime Minister De Wever said, look, this is too risky, too difficult to predict. Why not choose the other option, which is much easier, it has a certain cost, but is safer. And the whole argument that it would show resolve towards Russia, to supporting Ukraine, remains just as valid if we decide to finance a big loan to Ukraine by borrowing from the financial markets and bearing the cost of that, would also show enormous resolve from the European Union to support Ukraine. So the preference is to go for the other option. Now, clearly there is more support as far as we can tell from the Council, from more member states for the reparations loan option. Therefore, the challenge to obtain, if we go to this way, we have not excluded it. The Prime Minister has not definitively said no at any point. He's always said, you know, if we receive enough guarantees, and there are 3 guarantees that have been asked. One is that Euroclear must remain capable to reimburse the Central Bank of Russia if necessary. It must have access to the necessary liquidity in any circumstances. If for any unforeseen reason it has to pay the money back. I think it's largely recognized by our partners, by the Commission as well. We, at this stage, are not fully satisfied by the way this is done in the texts that are on the table. This is more a technical question than a political question there. And the discussion is ongoing. The second ask is that not only Euroclear, because the whole system was initially based only on Euroclear, but all financial institutions in the EU holding assets should be involved, even if the amounts are very different. There too, I mean, there has been progress in the text. The idea is there on the table that other commercial banks holding Russian sovereign assets should also be implicated. Again, still technical discussions ongoing. We're not sure this is absolutely fully covered on an equal basis for everybody. And the third one is probably the most tricky, is protection of both Euroclear and Belgium against retaliation from Russia. And there we are in full discussion, but we're not there at all. I mean, as far as you know, there is a system built into the system of guarantees by the member states to make sure that Euroclear would have access to liquidity in case. So the idea would be, say, we have a peace agreement, and it's been forced upon Europe in this peace agreement to reimburse Russia. We would have to reimburse without asking Ukraine to reimburse the loan. So the member states would give guarantees that in that case they would pay. So these guarantees that are meant to secure liquidity for Euroclear would, in the mind of the Commission and the text, also be available in case there are judicial or arbitral procedures against Belgium. And so if Belgium is them to pay something, then we could also use these guarantees to pay. The problem with that is that these guarantees will only ever be given for the actual maximum of the amount that is available. But we've been saying from the beginning, there is a risk, maybe not extremely high probability, but would be extremely serious for Belgium if it materializes. There is a risk that we could be condemned to more than the amount. 10 years from now, be condemned to pay damages to Russia or to the Central Bank of Russia on top of the capital that is there. So in theory, the risk is bigger than the amount actually sitting at Euroclear in the commercial banks. And we have not obtained in any way any commitment to cover this residual risk. So as far as we know, Belgium is still being asked to bear alone this residual risk that would, if ever the amounts to be paid go beyond the amounts that are actually sitting in the banks in Euroclear at the moment. And for Euroclear itself, the risk is that they have also assets in Russia that date from their dealings with their counterparts in Russia in the last years. It's much lower than what they have here, but the provisions for offsetting this and covering the risk are just completely unsatisfactory. So the coverage, in spite of all the talk about covering Belgium's risk, we don't see that this is fully reflected in the text, and this is why at the moment we have still expressing our insatisfaction with the proposal on the table. So we will see what happens at the council tomorrow. It will be a difficult decision. And I really can say that I'm sure the Prime Minister has not made up his mind yet between saying no and going for the other option or accepting the guarantees that are proposed. All of this is still in the air and will be a difficult debate tomorrow.
Okay, thank you very much. It was extremely clear, and yeah, of course, it raises a lot of questions that we will not yet address. But yeah, one of them being for me the extent to which one could decide not to. I mean, the qualified majority voting would be in a way stopped by the famous and old Luxembourg compromise kind of objection of Belgium, saying we have vital interest here. You have no right to decide in spite of our objection. But okay, but I think Mr. Bodson.
Yeah, I think and on this point in particular. This Luxembourg objection provides for one thing. It is actually for a vote in the council, a formal vote. So the European Council will not hold a formal vote, of course. And they take political guidelines. And what it does, this Luxembourg rule, is that the discussion is brought to the European Council. So this is it. I mean, we will have the discussion tomorrow in the European Council.
Yeah.
This is so, I don't think there is any. I think everybody would much prefer not to impose something on Belgium. I think this has been stated by many states, but we'll see how this plays out tomorrow.
All right. Thank you very much. Thank you so much. So we're moving on now to our third speaker. So Pierre, Klein, the floor is yours. Thank you.
Thank you. So my task is to discuss this issue from the point of view of public international law. I wonder to a certain extent if it's still a very relevant debate at this stage, because from what I followed today is that mainly the issues revolve around questions of procedure and the European treaties. They revolve about the question of guarantees that are provided to Belgium in this context. And it seems to me that the discussion around the basis for such measures under international law is not so relevant anymore. But I'm happy to contribute to this discussion on that point. basically, the starting point is, of course, the fact that we are talking about the assets of foreign states. These are mainly the property of the central bank of Russia, which is undoubtedly an organ of the state endowed with public functions and tasks, and therefore, as a state organ, the Bank of Russia itself and the state assets do enjoy immunity. Immunity from jurisdiction before other states, immunity from execution as well. These are the basic principles that follow from the principle of state sovereignty, the equality of state, the protection of their sovereignty, and therefore those assets would enjoy this type of protection. But if you think of it, what we have noticed is an infringement on the sovereignty of Russia as of the beginning in that matter. As soon as the assets have been frozen, even if for limited periods of time, and even more so when the assets are frozen for an indefinite period of time, of course, they are not at the disposal of the state anymore. And therefore, there is already an infringement of sovereignty in that respect. And in that sense, what is on the table now makes, I believe, no significant difference of principle. Basically, there are the same underlying principles that come into play. And the basic question is at any stage to know whether there is any kind of institution in public international law that allows for the infringement of this principle of sovereignty. The basic response which is put forward by most commentators in that respect is, of course, to resort to the institution of countermeasures. These are measures that can be adopted lawfully by a state inasmuch as they respond to a previous initial internationally wrongful act that has been committed by the states targeted by those countermeasures. In our case, there is obviously no doubt that we are talking about a breach of international law, and not only that, but that we are talking about a major breach of the most fundamental rules of international law when it comes to an act of aggression, continuing occupation of a significant portion of the territory of a sovereign state, and so on. The legality of Russia's conduct has been clearly recognized and established by a very large majority within the UN General Assembly as early as March 2022. The condemnation has been repeated since then, and there is no doubt that we are talking again of a major breach of the most essential norms of public international law. What is accepted more and more in that context is the fact that countermeasures may be resorted to not only by the state, which is the immediate victim of that breach of international law, but also by other states and actors when it comes to the violation of those most fundamental norms. This has been recognized amongst others by the Institute of International Law in 2005, and certainly there is a large movement to that effect. Therefore, the use of countermeasures in such a situation may be essentially twofold. You may conceive countermeasures as a means to get back to compliance with what we would usually call primary norms. These are norms of conduct. It's the primary obligation that has been breached by the state. In this case, the purpose, the aim of countermeasures would be to bring Russia back in compliance with its obligations under international law, so mainly withdrawing its troops from Ukrainian territory. There is a second purpose aim that could be considered as well, that relates to what we term secondary norms. And among those secondary norms appear the norms on state responsibility and those norms regulating the consequences of an internationally wrongful act. Chiefly among these, the duty to provide reparation for breaches of international law. So countermeasures may be used with that aim as well, i.e. to somehow compel Russia, in this case, to provide reparation for the damage caused. There are a number of conditions for countermeasures to be lawful under international law. One of them is, of course, proportionality, but here there is no doubt that there is proportionality both in terms of the type of obligation that is breached in countermeasures, the encroachment on state sovereignty upon its assets, and in terms of monetary considerations as well. We are talking about assets that amount to, it has been said earlier this afternoon, I believe, $210 billion. It is estimated by now that damages caused to Ukraine so far exceed $500 billion, dollars. So there is no doubt in terms of proportionality as well. So basically, this certainly provides a strong basis under public international law to justify the type of measure which is considered. Reference has been made earlier this afternoon as well to the necessity for countermeasures to be reversible. This, even though it's not an absolute requirement when it comes to countermeasures, but under the present scenario, it is clear that those measures would indeed be reversible, and therefore that there is very little ground to doubt the legality under international law. So what we see, obviously, is a sort of displacement of the debate around other issues. Of course, my attention was caught by the arguments put forward by Belgium and repeated by Mr. de Bassompierre this afternoon, the risk in particular of judicial proceedings in different fora, the risk of arbitral proceedings in particular being instituted under the bilateral investment protection treaty concluded between Russia, or at the time the Soviet Union, and Belgium and Luxembourg, or other fora. There has been word of arbitral proceedings being instituted in Russia earlier this month. It's worth noting, I think, in that respect, over the last 24 hours, I had the opportunity to take note of two studies that have been produced on this issue. One of them is in full and could be circulated by a group of lawyers. The other one I've just seen a reference to by law firm Covington and Burling, which basically both conclude that the risk of such proceedings being instituted with any chance of success is absolutely minimal. So there are many doubts that are expressed when it comes to the reality of said risks in that context. Finally, and even though it's not certainly not an international law issue, I'm sort of really perplexed, if I may say, by the argument relating to the reputational risks, saying, well, Europe will be in a bad position because states will take note of that and therefore won't entrust Europe with the sovereign funds in any way in the future. to me, it's a bit like saying, and I have said that in different contexts earlier, it's a bit like saying that banks or that state authorities rather should not freeze the bank accounts where drug dealers stash their money, because that as well would be sending a bad signal to banks' clients, telling them that your deposits are not safe within our bank, because see, the authorities are seizing the money coming from drug trafficking. It's basically the same thing here. We are not talking about ordinary money from an ordinary state. We are talking about the funds that belong to a state which has committed a major violation of public international law, which has been widely recognized, and therefore some consequences need to be drawn from such a situation. Economists have even underlined the fact that it is precisely what makes the strength of the financial system, the ability to be able to distinguish between illicit or properly deposited funds and those that are not meeting these requirements. And clearly, I think we are talking about the same type of consideration here. For the very, very large majority of states, there is no cause for such concern because they are not going to invade their neighbors in the coming years and keep on occupying their territory. So there is no reason in such circumstances to have fear for such an outcome, which is obviously a very exceptional response to a very exceptional situation. Of course, many more issues to be discussed at greater length, and I will stop at that for now.
Thank you very much for this very, very clear perspective from international law and also dissenting, let's say, opinion from the one we just heard. If you have an opportunity to do so, if you could put the link in the chat, the link to the opinion of lawyers, of scholars, I think, that you were referring to would be great. And I think now
it's not published.
Okay.
It's not published on or available on a website, but I'll be happy to send you a copy.
All right. Okay, great. Okay, thank you very much. So now I open the floor to the discussion. If anyone wants to start with the first question. Yeah, Nicole de Wandre. Yes, and maybe you can present yourself quickly so that everyone understands where you're coming from.
Hello, everybody. Yes, so I'm retired from the Commission after 41 years there, and now a senior associate fellow at Egmont, and I was happy face-to-face with Pierre Klein on a debate that Elsuwege organized. Okay, thank you very much, Antoine, for organizing this, and thank you to the three speakers. First, I think you introduced, Antoine, the fact that you were had the research project on how we use emergency. I think has been alluded to by Peter van Elsuwege that this is a misuse of emergency use just for convenience of having a qualified majority, a text that can be adopted at qualified majority. So I think this form of abuse goes with the generalization of some double standard approach on the principle that we claim we act along. And I would, for example, on the proportionality of the measures, just quickly to the argument of Pierre Klein, I think that the way we treated in parallel the conflict in Ukraine together with Israel and the conflict in Gaza has nothing comparable, showing that it's not necessarily principle that matter. And the fact that there were no precedent, including in World War II, show that maybe I would be less sure that there is proportionality in what we envisage doing. Now, on the second point is on the principle, what Monsieur de Bassompierre said, that a lot of countries, notably Germany, he mentioned, don't like joint borrowing. I really think that pushing back against Germany, because one thing is the principle that Germany is there putting forward, together in parallel with the principle that Belgium is putting forward for not bending into this. I think that if Germany thinks this is so important that it's ready to override Belgian concern, why not open their thinking for what they already did with the COVID and Next Gen EU. So indeed, we did that. And then also I wonder why we cannot circumvent unanimity. I don't know if there wouldn't be a possibility to have a coalition of the willing type for funding, so that you could do that by creating a sort of consortium of countries ready to do it, not under EU necessarily, but why not? If this is really what every country wants to do to fund Ukraine, I think we need to do that. No, why not envisaging this type of alternative? Now, the third thing is, I found that the refusal of Belgium to agree with the solution so far protects Europe. The systemic risk is not against Belgium only. So I would have asked Mr. de Bassompierre, and I don't think that we already have Benjamin Bodson on the call, but the problem in accepting, he said we want Belgium, we want 3 guarantees: the protection of in case of retaliation, what we do if we have to pay damages and interest on top of the sum. Who will be guaranteeing this if the whole Eurozone collapse? I mean, and I really think there is a risk, a systemic risk on the Euro and the EU beyond Belgium. So I saw that the argument of the fact that Belgium is, I think, protecting Europe against a systemic risk with its resistance to this option is not solved by considering that if we get protection, solidarity by other member states, then we are well and we are okay. In terms of other member states, those who push for finding a solution quickly to fund Ukraine should then, I think, make a sort of consortium like the coalition of the willing type of measure. And I wonder if this is envisaged somewhere. So yeah, these are my points. Thank you.
Thank you very much, Nicole. Yeah, indeed, Benjamin Bodson isn't there yet. He would probably support your position. I don't know if Peter or Pierre, you want to react to this?
Maybe briefly on the point. I mean, I would say, I mean, there is an emergency, but it's in Ukraine, and the question is, I mean, it's more kind of legal question for using Article 122 TFEU, which is about emergencies within the European Union and responding to, let's say, economic difficulties within the Union from an economic policy point of view. So that this is, of course, what the kind of, let's say, problem is in terms of justification from bringing the measure, which is actually a measure that in essence serves the emergency which is outside of the Union on the basis of a treaty provision that is about the internal situation, economic situation within the Union. So that yeah.
If I may just add that von der Leyen, in her statement of December 3, I didn't look at the legal text. I'm not a lawyer, but the political statement she made, she said that the only language Russia understands is pressure. If we had any success with our pressure so far, we would know it, if I may say so. I think so far, we keep thinking pressure works, and the more we put pressure, the more out of the game type of we are. And so I really don't see what pressure so far has given us, apart from the right to keep funding Ukraine with the so-called Reparations Loan, which is only keep the war going. So that's totally insane to some extent. Sorry. But this moral argument and feeling that just keeping pressure will work, I don't know how many more years we need to understand that this may not be the case.
Okay, although that is maybe slightly different. It's no longer so much about pressure than assisting Ukraine, I think. But Pierre, did you want to add something, or Peter, maybe you weren't done?
Well, briefly, because it's been mentioned that there was no precedent for this kind of thing. But of course, there is one precedent which is extremely significant, which is the precedent of Iraq following the war against Kuwait. The basic principles there were the same. The state that committed the act of aggression was forced to pay reparation using its resources, mainly the incomes from the production of oil by Iraq. Of course, the setting the context in which this was done was very different, because it was a multilateral setting. This was done under the auspices of the UN. There was a UN Claims Commission that was established at the time. But basically, we are talking about exactly the same type of situation. So there is definitely a very clear precedent in that respect.
If I can ask you in terms of timing, because I think it was said by the Weber in his press conference, in terms of timing, was this Iraq case done when the war was over? So in the settlement between Iraq and the others, Kuwait included? Because the problem now is that we are a bit, it's precipitating, we are prejudging the end of the conflict instead of dealing with that as we must do at the end of the conflict.
Well, I'm not sure I see the argument there. What's the end of the conflict to do with that? Because the end of the conflict would mean that Russia would not have to pay reparations?
No. But what I ask is, in the Iraq case, was it when the war was over that this was decided? Because now, if we use this money for a reparations loan and the war is not over, and it's again, with which money from Russia will we be able to repair Ukraine when the war is over and we get a settlement? Because there will be such a day, hopefully. So isn't the precipitation in using the Russian asset also a problem in itself, the timing?
Well, there are two ways to look at that. Of course, yes, indeed, the settlement, the measures imposed on Iraq, this was done after the end of the war, but this was a much shorter war. And there was, of course, the involvement of the UN, which is not is not going to be the case here. So that's quite clear. But at the same time, we know that there has been a very significant amount of damage which has already been caused, and that under international law, Russia is already now under an obligation to provide reparation. So in that sense, it's not premature.
Thank you, Peter. Yeah.
I mean, just at one point to one of the elements that was raised about the alternative, about this coalition of the willing and so on. I think, I mean, legally it's possible if you have a kind of member states, willing member states having an intergovernmental agreement among themselves, even without a union. Legally speaking, I think that could be an option. Whether it's politically an option is something different, because of course there it increases the depth of the member states, and you don't have the link with putting pressure on Russia and the link with the entire discussion on damages, and that's a political decision that has to be taken by the European Council.
When you read in Politico that the Council tomorrow and Friday is the most important, and when you see how dramatic it is, what makes it dramatic is that the urgent need of Ukraine to get funding. So this is the urgent. So if everybody agrees this is a defining moment, why believe this should be on the back of Belgium? I mean, they should unite to make a joint borrowing with an intergovernmental agreement. Well, I mean, I really don't understand how they can be so pressuring us and staying comfortably without imagining out-of-the-box option, frankly speaking. And I prefer an intergovernmental agreement with member states who are really in it than abusing EU through qualified majority, sidelining member states who don't want to go along with it. That doesn't help the EU to go well, I think, and its legitimacy toward the public opinion. But I see nobody wants to raise their hands. I don't want to monopolize the debate.
No, I think maybe we can give other people the floor. Maybe other people would like to join. Yeah, Frédéric, please. Please, your mic is off.
Yes, sorry. I was saying good afternoon. I can go then. Thank you for the initiative, Antoine, and thanks for to the speakers. I just wanted to quickly flag 3 blind spots I think these are blind spots in the very recent legal discussions. First, on the Article 122 regulation that was adopted last week, it may give the impression that we are shielded now against claims by Russia or the Russian central bank, because anyway the assets are immobilized in the long term. Well, I think that I'm afraid Russia or the central bank might still try to challenge the freeze in itself. It's true that they haven't done it so far, but maybe now even more that there is this deep freeze that has been adopted. They might try to challenge it before the arbitral tribunal. And when you think about it, that's exactly what the oligarchs, so the private claimants are doing, including against Belgium on the basis of that very BIT, bilateral investment treaty. They may even try to challenge the new regulation before the Court of Justice, by the way, although admissibility would be an issue, obviously. So that's the first thing. Very quickly, the second thing, and thank you, Pierre, for all the remarks, and I fully agree that countermeasures are key in this situation. And I think it would be relatively easy to rely on countermeasures if you want to justify the violation of the immunity from execution, as was explained. Now, if we take the scenario of a potential breach of that bilateral investment treaty, which is the main risk that the Belgian government is putting on the table, apparently, I'm afraid it would be already a bit more difficult to invoke countermeasures in that specific legal framework of the BIT. There is not much case law, but it's not clear. But especially if it's the Central Bank of Russia that is the claimant, not the Russian state, I think the risk is not so marginal as some law firms may say. And by the way, Covington assists Ukraine, so it's not. It was very timely, of course, that this study was released now. I think it's also to put some more pressure on Belgium. And finally, another thing that is a little bit overlooked, although it was in the media again yesterday, it's the Claims Commission for Ukraine. It's strange how this development is taking place separately, although I understood from the beginning that the two issues, reparations for Ukraine through the use of the Russian frozen assets, and the Claims Commission should be linked. I believe that somehow, at some point in time, the Russian assets would be used to fund the Claims Commission. And yesterday, Belgium and the EU signed the convention establishing the Claims Commission for Ukraine. As we all know, the signature of a treaty obliged not to defeat the object and purpose of the treaty. So can it be argued? It's a question. I just thought about that yesterday evening. Can it be argued in international law that now Belgium and the EU should think at least twice before allowing a transfer of the Russian assets to Ukraine, because that would maybe defeat the object and purpose of the Claims Commission. It's just a question. Thank you.
Thank you, Pierre. Maybe you want to.
Yes. So thank you, Frédéric. These are all, of course, very important considerations. I quite agree that what you called the deep freeze is already problematic in some ways from Russia's perspective, and indeed it is as a reaction to the imposition of this deep freeze that, according to what we've read, some proceedings have been instituted before an arbitral tribunal in Moscow. So I'm not too aware of the details here. What kind of arbitral tribunal are we talking about? What's the composition? What's the jurisdiction of that tribunal? All that is pretty unclear because all we saw was 1 or 2 lines in newspaper articles, but it was obviously prompted by this decision of 12 December. What may be said in that respect is that further measures that would be taken along the lines of the loan proposal and so on wouldn't make any difference in that respect. I think this is quite telling. What's happening is in itself evidence that nothing worse in a way could happen. We are already there from that perspective. So that brings us to the second question, which is the bilateral investment treaties or this kind of protection. There are many reasons for questioning there. I'm not an expert in that field, far from it. But of course, the main risk in many respects is the composition of the arbitral tribunal, if one was to be established, because it's always a big unknown. You never know how things are going to go, and that's one of certainly the uncertainties, the main uncertainties that flows from this kind of system is the fact that there are very significant differences in opinions on similar issues of law, depending on the composition of such arbitral tribunals. But this being said, elements of uncertainties when it comes to our matter is, for instance, are we talking about an investment here? Are the funds of the Central Bank of Russia that are deposited with Euroclear, do they qualify as an investment in the context of bilateral investment treaties? Is the Bank of Russia a proper claimant in such proceedings? Can it be really considered to have locus standi before such an arbitral tribunal? Frederick rightly mentioned the situation of private individuals, the oligarchs, that have instituted such proceedings, and that's a totally different matter, certainly. But we are talking about a different type of entity here. So that's one more uncertainty. You could add more. There is in those treaties a public order exception. The fact that some measures that are taken by the state may be justified somehow by considerations of public order. How is this concept to be interpreted? What does that mean in this context? If there has been resort to Articles 121 and 122 in the context of the European treaties, which have been interpreted obviously quite extensively according to what I've heard, this could be very well the same when it comes to this type of clause in those bilateral treaties. So there are many reasons to doubt that indeed there is a clear-cut situation and that there is an absolute risk flowing from those treaties. According to what I read, by the way, the opinion by Covington and Berlin was produced in response to a request by a Ukrainian company, the owners, among others, of the very large steel mills that were destroyed during the first phase of the war in Ukraine. Last, what you mentioned about the Council of Europe initiatives is certainly very relevant as well, of course, in this context. And that certainly was one of the issues. I was interested in taking a look at what was discussed in that context in The Hague yesterday, what was agreed. So obviously, what we have is a mechanism that has been put into place, but with which is at this stage very much an empty shell, because there is no indication as to the funding of the mechanism. And of course, that's where the two issues may somehow connect. And it may be thought that indeed the assets could be used and managed in a way under such a mechanism. So thank you for that.
Thank you very much. Yeah, and just to support in a way your position, it seems to me that this bilateral investment treaty provides for some guarantees in the fact that, of course, the arbitration panel would have to be part of the UNCITRAL setting in New York, right, or in the Stockholm Institute for Arbitration. So that seems like, I mean, fairly decent and respectable kind of bodies. And of course they are, and that's, I mean, set in the letter of the treaty, they have to take into account the general principles of international law. So would they really be able to, in good faith, consider that there is no violation of any peremptory norm of international law? Anyway, so we still have 19 minutes. I'm still in contact with Benjamin Bodson. He's on his way. He's coming. He might be able to ask a few more questions from you. He said he would be there for the last 15 minutes. So is there any other question?
Maybe if I can add to what was being discussed just a minute ago. I mean, I fully agree in terms of the first point, what was raised in terms of the litigation risk and the challenges. This is mostly related to the indefinite immobilization of the Russian assets, which is was decided already Friday. So I fully agree that it because now it's separate. I mean, legally speaking, it's separate regulation, which is, shall we grant a loan to Ukraine? But the money from the loan, it's not immediately Russia's assets. It is the cash which is on the accounts of Euroclear. The big challenge, of course, is that you need a guarantee to have this cash ready once the assets are no longer immobilized. But the main, I think, arguments from a Russian point of view is the continued immobilization of the assets and the fact that they can simply not use the money. And that probably they argue that due to the fact that they're now immobilized for an indefinite period, they probably challenge the fact that this is really temporary and reversible, probably. So that's I would tend to agree with what was said, that the risk is mostly related to that regulation and perhaps less to the new regulation which on the table. Of course, the new regulation is perhaps more about the perception, which was also added as one of the concerns, than the real litigation risks. And that, of course, is very difficult to get kind of legal guarantees for how will the granting of such a reparations loan be perceived by the outside world. I mean, that's, I think, one of the core elements in the discussion, but they go beyond the possibility to grant legal guarantees. And that's a bit unpredictable, of course. This is how I see it.
Yes, thank you. Guido Belenghi, can you also please introduce yourself, Guido?
Yes. Hello, I'm a PhD researcher at Maastricht University. I deal also with the EU emergency law and a lot with Article 122. So I have a question for Peter, because it seemed to me you were very concerned with this internal external dimension. So 122 for the internal dimension being used for an external problem, but maybe I think when I read the recitals that the explanation of the Commission as to why it matters for the internal EU economy is not too far-fetched. It is pretty solid, I would say. It's not too far-fetched, but in terms of legal issue, maybe something I wanted to know your opinion on is to what extent it could be defended that this is primarily about an economic issue in the sense of 122 TFU, rather than a sanction due to the the without prejudice clause that you have in 122. So is that defendable in your view as an expert, that this is not a sanction, so that we're not circumventing the without prejudice clause? Thank you very much.
Yeah, thanks for the question. I mean, of course, the Commission refers to the kind of impacts for the internal economic situation, because that's, I mean, required to adopt a measure under this legal basis. What I try to say is that, I mean, if you look at the broader context for the adoption of this measure, the measure is adopted not, I would tend to argue, because there is a kind of economic emergency that needs to be addressed within the Union. I mean, it's in essence about the financial problems that exist in Ukraine. I mean, the context is that we need to find a way to finance Ukraine. And this is the broader context of the entire discussion. Of course, it's framed a little bit as there is a link with the domestic economic situation of the EU, and you can provide arguments. I mean, it can be discussed, of course, but looking at the broader context, it seems to me that this is a way which tries to circumvent the more perhaps obvious legal basis for this type of measure, which would be a sanction under, I mean, a restrictive measure under CFSP, as I mean, the prohibition of transfer of central bank assets was part of such a restrictive measure. So from a legal point of view, I mean, of course, I see the political reason behind it, and I see why this is all argued in the way it is argued. But if you look at the broader context, it seems to me that this is an attempt to circumvent the more obvious legal basis. And there we come to your second part of your question, the provision without prejudice to other procedures. So it's, I would say, typical kind of question of what is the appropriate legal basis for this type of measure. And here, yeah, it's what is the main objective of the measure of keeping Russia's assets immobilized? Is that to address domestic problems within the Union, or is that to respond to Russia's war of aggression, which is part of the common foreign and security policy, and to help and support Ukraine, which is outside of the Union? So there, if you look at, I mean, simply apply the traditional test for defining the choice of legal basis. You look at what is the content, what is the objective of a measure. My kind of legal analysis would be that it's more inclined to a CFSP legal basis, and that the other legal basis is used pragmatically to allow a decision under common qualified majority voting. And of course, I fully understand the political and strategic reasons to do this. But if I look at it from, let's say, an academic legal point of view, I don't think it's very convincing. Also, if you would, I mean, if you simply look at it, you analyze the provision, it's part of the economic policy chapter in the treaties. It's about economic problems in the Union. Is this really to address economic problems in the Union? Question mark. Do we need to immobilize Russian assets for that purpose? Well, to be disputed, to say the least. So that's why. I mean, I hope that clarifies your point. And also, if you link it to, I mean, the treaties, particularly since Lisbon, have this Article 40, and Article 40 that is about, I mean, also protecting, the paragraph 2, protecting the scope of the CFSP against the too broad interpretation of other provisions in the treaties. So if you look at that, and of course I know that in Arti France, for instance, the court said, I mean, it's not necessarily one of the other, it depends upon the instrument that you use for a specific objective. But here I would say the instrument for the objective is to address the war in Ukraine rather than the economic, let's say, problems and difficulties within the Union. So that's why I have doubts, legally speaking.
Although it is likely that in any event the Court of Justice would condone any original kind of or creative, let's say, use of a legal basis, as it usually does in emergency situations in particular. So thank you for this, and I can see that now Benjamin Bodson has just arrived. So thank you, Benjamin, for being here with us. I don't know, are there people here in the audience? Yeah, Nicole, who would like to maybe ask questions to Benjamin directly? Yeah.
No, sorry. Thank you for being there, Mr. Bodson. So I am a former European official, 41 years, and now with Egmont Associate Fellow. I had a question about Mr. de Bassompierre told us that indeed the point of Belgium was that seizing the Russian assets would create a systemic risk for Europe as a whole, and the euro. But then he said that we are asking for 3 guarantees. One is for Euroclear to have the money should it need it to pay and reimburse. The second is that all financial institutions are involved, all other financial institutions with Russian assets in Europe. And the third is that Belgium is protected jointly in case of retaliation. My question is that does not address the fact that the Belgium in its attitude is protecting Europe, the Eurozone and the EU in general. If we believe that there is a real risk for a major financial crisis, why would this guarantee be enough? Because if we are all in a mess, who can guarantee us against the mess? Would the other EU partners be enough? So isn't it too short to just ask to be protected? And because that bends into the fact that everybody thinks that we are just afraid. They don't see that we are warning them against a collective risk that Europe is taking, not only Belgium. So if they only address the fear of Belgium, we may miss the most important aspect of your argument in the Council. The second is that von der Leyen said in her statement that the pressure on Russia is working. I wonder who around the Council table believes that pressure on Russia is working after 4 years of putting pressure on Russia, and the limited results Europe can claim from having put this pressure so far in terms of our capacity agency in the negotiations. And then the last thing was, why not, if Germany doesn't like, for example, joint borrowing, although they did it for the EU, the next generation EU joint borrowing, why not envisage something like an ad hoc consortium of member states who would agree together in an intergovernmental type of argument to make a joint debt? So why does it need to be under the EU umbrella and request unanimity, therefore? And if Germany doesn't like joint borrowing, but thinks it can push Belgium to take the risk on itself, I think that they more or less lose their credibility in the debate, because this type of asymmetry in what you, in the principles you are holding to, which is this frugality argument, for example, but then pushing the other close to the brink, I think in a way disqualify the German type of pressure, if this is the pressure you receive, from what I understand. So these were my 3 questions. And thanking you for the resistance. You understand that I stand behind the Belgians' attitude.
Please, Benjamin, you have the floor if you want to react.
Thank you. Good afternoon, everyone. And sorry that I could only join now for the last 15 minutes, as you understand. And as I wrote to Antoine, the advantage of this event is that it's very timely, but it also means that for representatives of the Belgian authorities, this is more difficult to make ourselves available. But I'm happy that Christophe de Bassompierre could already introduce the topic. I'm happy to answer directly to Nicole, but I because of in the interest of time, as I see that we have only a few minutes left. Antoine, do you prefer to ask if there's another question and then I answer all in one, or?
We may do that. Yeah, of course. If there is any specific question directed to our representative of the Foreign Affairs Minister.
If none, then
Okay. Yeah. Peter, yeah.
Yeah, if I can also ask a question. I wonder, from the Belgian kind of point of view, what is the biggest concern? Is it the risk for potential litigation, or is it more the kind of broader and risk, which is perhaps more unpredictable, which is the perception of granting the loan for the role of Euroclear and how the financial system works? So is it the concrete risk for litigation, or more the kind of more unpredictable risk that are related to that?
Okay. No other questions? All right. Thanks for those two questions, for those two sets of questions, and thanks a lot for the support as well. Very much appreciated. Nicole, I was myself associate fellow at Egmont Institute until recently, so we are colleagues. On your first question on the financial and economic risks, I'm not an economist myself, but this is an explanation we got very early on in the process from different economists, that the signals that would be sent to the markets would be quite detrimental. And from this, we actually made more concrete our request on the third point that you mentioned, which is the level playing field. So the fact that all financial institutions would be concerned. What we see here for an actor like Euroclear is that there is already undue competition starting. We hear commercial banks saying to third states that they better put their sovereign assets in their accounts rather than passing via a CSD like Euroclear or Clearstream. And of course, this destabilized the role that a CSD like Euroclear can play. We have seen also some states like the Gulf countries, for instance, that said that they would possibly remove their sovereign assets from the EU market should that measure be adopted. And you have seen no later than this morning that even some EU member states, one in particular, has already announced that they would also remove the reserves that they hold in Brussels. So those elements, and also as confirmed by the ECB at the beginning, Christine Lagarde was a bit more ambiguous, but then she came to the point that indeed this bears risks for the markets, this bears risks for the euro, and those needs to be taken into account. This is actually now all the discussion around, on top of what I've just said, on what type of instrument the financial institutions would get in return of lending the money to the Commission. On your second question, which was more a comment that do we really exercise pressure on Russia with the sanctions? I can agree with you that those sanctions have their limits and that they don't maybe have the impact that we expect or hope they have, but it doesn't mean we should not keep on adopting them. So that's why Belgium has been always supportive of the different packages of sanctions, and we are already working and making suggestions on the 20th sanction package, which is in the making. On Germany, and I must tell you in full transparency that we are grateful to the fact that the Germans have always been coherent with their position, well, the position that they've taken since the op-ed of Friedrich Merz in the Financial Times. They've told us the Belgians bear risks by doing that, and so we are happy to cover them, and they've been indeed very consistent by telling us, tell us what you want, and we will accept. When in October and later on, Prime Minister Bart de Wever asked around the table of the European Council who is ready to support the risk, to mutualize the risk that we take, only one leader raised his hand, and it was Friedrich Merz.
Okay.
Why not an EU loan? It's clear that the German authorities have considered that financially and also geopolitically, probably the best option is to do the reparations loan as it stands now in the text of the Commission, and why not an intergovernmental solution, or a solution that had already also been put forward, which is that member states would do a loan, and somehow the Commission would serve as an authority to put the loans together and then bring them to the Ukraine, is the big impact on the national budget of such an operation. So that's why this option has been relatively early in the process. Well, it feels like years ago, but it was only a few weeks ago. It has been put on the side and not considered as a credible option.
But
Peter,
the point by the Bassompierre was that others think that this Russian asset solution is an easy one that has no cost. I think this is a deep illusion, as you say, and our Prime Minister. So how can the other continue to believe it's cheaper than a joint borrowing? I frankly, voilà. Well, okay, good luck.
This is because we disagree, or at least we disagreed on the level of risk that we take financially with this operation of the reparations loan. But on the question on turning to Peter, what's your biggest, let's say, concern? Of course, we'll understand that our three demands have always been put on the same level for a reason. But it's clear if you look back at what was already our position on the sanction regimes itself, we always said we want that the risks that are being taken by Belgium should be mutualized. When the sanctions have been adopted, we didn't get that mutualization of risk that we were willing to have. So the first elements that we have always had in our head were the risk linked to the BIT. But frankly speaking, this is also the risk understood in a broader sense, like the credit rating of Belgium, the risks of Belgium being more exposed to Russian hybrid attacks, and all those risks prove to be real. So these are also taken into consideration in a more global picture of what is our main concern. But again, if we have put those three demands on an equal footing, is for a reason, because we have no interest in Euroclear collapsing, and we have no interest in seeing that Euroclear is singled out, and that other financial institutions in other member states do not make their part of the project, or let's say.
All right, thank you very much for this very clear, again, position and explanations. Thank you also for making yourself available with such a busy, of course, agenda now. Is there anything, any last word, any last question that anyone wanted to ask? If none, then I suggest that we end this session now. And thank you again very much for all the three of you for your presentations and everyone for being here. And the best of luck, Benjamin, and all your colleagues for the upcoming days and negotiations.
We're not
Thank you very much.
Thank you.
Bye-bye.